Let's talk about how to pay off a credit card with no cash flow. Let's say you don't have a job, or you're going through a rough financial patch right now, and you do not want to like, you don't have cash, but you still want to pay off your credit card. Let's talk about that. Here are the steps I want you to really think about. First of all, you want to contact your credit card company. Everything starts with having a conversation. You want to initiate a conversation with a credit card company. Do not despair. Simply because you don't have cash coming in right now doesn't mean that you cannot participate in the economy. Okay, you have to actually talk to your credit card company. There are people there who can understand you, and you're not the first person. You will not be the last person to go through a rough financial situation. Okay, so if you can't pay your credit card bill, contact your creditor right away. Financial challenges are common, and most credit card issuers have policies in place for these situations. The credit card company likely offers a financial hardship program that may include assistance like reduced minimum payments, for instance, or reduced APR, waived fees, or even credit card forbearance. Okay, this can actually remove some of your financial burden while you sort out unemployment benefits. Keep in mind, however, though, that if you sign up for a credit card hardship program, you may not be able to use that credit card during the enrollment period. Okay, so that's really important. Let me give you a few phone numbers here in terms of like you can actually contact if you're going through a rough financial patch right now. So for American Express, they have a hardship assistance program. The number here is 1-800-551-1814. We're going to put this on the screen so you have a clear idea. And so that's for American Express, 1-800-551-1814. For Citi, you have 1-800-722-8791. You have Discover. They have also a payment assistance program. So that's the number here is 1-800-347-2683. And then you have Wells Fargo, and they also have a hardship assistance program. And the number here is 1-800-642-4720. So bottom line here is you want to enroll in the creditor hardship program if available. You want to request a written copy of the hardship program agreement for your records. Keep track of the dates you first contacted your credit card issuer and the representative you spoke to. Okay, this can help if you need to dispute any inaccuracies down the road. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. The next thing you want to do here is to enroll in credit counseling services. Okay, let's say if you are unemployed with credit card debt, you can enroll with a nonprofit credit counseling service at little or no cost. And the cool thing is that credit counselors teach consumers how to make educated financial decisions about budgeting, money management, and debt management. And credit counselors can actually work with your credit card company and advocate on your behalf. This is pretty cool. And a credit counselor may choose to enroll you in a debt management plan, a DMP, to help you repay debt in 3 to 5 years. And debt management plans may show up on your credit reports, but will not have a negative impact on your credit score, though paying off debts can sometimes cause your score to drop. So so you got to think about that. So let me give you the pros and cons of credit counseling services. The pros: you can repay your debts within 3 to 5 years. The credit counselor may be able to negotiate reduced fees and interest rates. Some borrowers may be eligible to enroll with little to no fees, and your credit card bills will be consolidated into a single monthly payment. What about the cons here? Well, these programs may come with a startup cost and monthly fee for some borrowers. You will likely need to actually close enrolled credit cards. You will need to refrain from opening new credit cards. Another strategy you want to think about is to see if you qualify for government aid, right? Because if you're trying to really pay off a credit card with no cash flow, you need to see if you qualify for government aid. While there are not specific government programs to help with credit card debt, you may be eligible for aid in another form, such as unemployment benefits. And the thing is that each state sets its own guidelines for filing for unemployment. So if you lose your job, you want to contact your state's unemployment insurance program to file a claim. And government aid programs can help you afford living expenses like food and healthcare. You may be able to allocate money towards your credit card minimum monthly payments to stay current on your accounts. Okay, and other government aid programs include, you have TANF, for instance. So that's the temporary assistance for needy families. You have a supplementary security income, SSI. You have supplemental nutrition assistance program, SNAP. You have Medicaid, and you have the CHIP program. So that's actually the Children's Health Insurance program. So this is kind of cool. Again, you have a variety of programs at the state and federal levels if you need help. Boss, I want to quickly remind you of today's topic. We are having a conversation about how to pay off a credit card with zero cash flow. You also want to think about consolidating or refinancing your credit card debt, okay? It's one of those things where, people struggling with insurmountable credit card debt may actually consider a debt consolidation loan or credit card refinancing. However, it may be actually difficult to qualify for a personal loan or credit card while unemployed. So when issuing credit or lending money, financial institutions like to see proof of income and a decent credit history, right? So the thing is, if you are struggling to take out a debt consolidation loan or a balance transfer credit card, consider getting a co-signer to increase your chances of approval. And so this is one of those things you have to think about. So let's quickly compare and contrast those two scenarios: balance transfer credit card and the debt consolidation loan. So when you think about a balance transfer credit card, this is basically a new credit card to which you can transfer the balance of one or more credit cards, right? Usually the APR ranges from 10% to 30%. And you may be able to avoid paying higher interest or interest altogether. Balance transfer credit cards sometimes come with an introductory 0% APR period that can go as long as 21 months. As long as you fully repay your balance within the promotional period, you can skip paying interest. This is pretty cool. And the drawbacks, those are the benefits. The drawbacks are that you may have to pay a fee. Some credit card issuers have a balance transfer fee of 3% to 5%. And not all borrowers will qualify. And those offers are typically reserved for those with good credit. Okay. So that's for the balance transfer credit card. What about the debt consolidation loan? Well, a debt consolidation loan is a lump sum personal loan with a fixed APR and fixed monthly payments that you use to pay off your credit card balances. And in terms of APR range, you're looking at 6% to 36%. And in terms of benefits, you may be able to make money on interest. Some borrowers can qualify for a lower APR than what they're currently paying on credit cards. And you'll always know what you owe, and fixed monthly payments help you keep track of your debt and pay it off over a number of years. What are the drawbacks here? Well, APRs can run high. Your offered personal loan APR may not be lower than your current credit card APR. And not all borrowers will qualify. It's hard to get a personal loan with bad or no credit. And the thing I want to say here, before you apply for any sort of debt consolidation loan or another credit card, check your credit report. You can check your credit report like on Equifax, Experian, or TransUnion, okay? And if you find inaccuracies, you want to dispute the errors with the relevant credit bureaus. The thing is that if you have to pay off a credit card with zero cash flow, you need to make a budget and prioritize expenses. This is so important because you want to make sure where the little money that you have is going, right? So you're not the first person who's been in this fix. The ones who actually have weathered it best start by making a budget that reflects their new financial situation. On the expense side, it's time to cut back spending, right? That means what? It means that you need to make decisions on what you really need and what you really don't. So when you develop or revise your budget, divide expenses into mandatory and discretionary categories. And mandatory expenses, which include housing, food, utility payments, cannot be avoided. Many discretionary ones like dining out and attending movies, concerts, or sporting events can and should be cut, really. And so other discretionary expenses, including telecommunication connections, car payments, and health insurance, can either be eliminated temporarily or cut back. Okay, so you got to really see what really works for you, for your family too. So let's quickly go through a few expense items here. You have a mortgage or rent. Now, mortgage or rent needs to be paid anyway. So if you can take in a roommate, however, you could save money on rent or offset your housing cost. You can negotiate with your landlord, offering to do maintenance work or find tenants to fill empty units in exchange for reduced rent. And if you're a renter, You might consider moving to a cheaper place or even moving in with parents or other relatives during your time out of work. Okay, those are things you need to think about. And if you own your home, the problem is tougher since mortgage lenders typically want timely payments. So this is kind of this, you have to think of it. Now, when it comes to utilities, you can reduce energy consumption to save on utilities. For food, well, food is an area where most people, when pressed, can find tremendous savings. So if you're eating out right now, forget about it. Health insurance, you got to really also see, you want to consider health insurance. If your former employer offers an affordable extension of your work plan, consider that. And you also have something called COBRA. This is actually the Federal Consolidated Omnibus Budget Reconciliation Act that allows the newly unemployed to continue their group coverage, but usually with a company subsidy that made the insurance affordable. Also got to think about car payments. Got to think about phone and cable. You got to think about services, subscriptions, and other expenses. The bottom line here is that you need to really see where you can save money. You can make cuts, and those cuts must make sense. Okay. Boss, I want to quickly remind you of today's topic. We are having a conversation about how to pay off a credit card with zero cash flow. One thing you can also try is to apply for unemployment benefits and other government assistance. Now, I think I've said this before, but I want to reiterate this. It's really important to understand that every state has different programs, and in some cases there are some localities like your township or your city or your county might have different government assistance programs. So it's one of those things where you want to really dig a little deeper at the local level. If you qualify for jobless benefits, apply for them. Food stamps and school lunch assistance can also save money by really reducing your expenses and money that you will need for other critical expenses. Though many of us resist seeking government help, if you have a genuine need, remember that the programs were designed to help people like you navigate rough patches, okay? And avoid taking cash advances or signing up for financial plans during your time out of work, and avoid using your credit cards, especially if you have unpaid credit card debt. Because the last thing you want is to actually have, let's say, a high CUR, a high credit utilization ratio, which you do not want to have. You do not want your CUR to go above 30 to 35%. And the thing is that you also have to think about the bad credit and unemployment. So past credit problems could hurt your chances of landing a job. So but now the Federal Fair Credit Reporting Act allows employers to pull credit reports on their employees and job applicants as long as they get written authorization from the person being checked. So this is what it is. So although more than 70% of organizations check some job applicants' credit, only 29% of applications to those companies are even giving credit reviews. So they have a variety of reasons for doing this, including an assessment of your competence handling money, your ability to make sound judgments, and even the likelihood you might commit a financial crime. Okay, so it's one of those things where you have to really see what really works for you, because every situation is different. Every situation is totally different, and the thing is, the law kind of fluctuates based on the geography, your states, your city, your county, and so on and so forth. Now, the thing is, when we talk about credit card and unemployment, there are a few questions that people talk about. And again, we're talking here about how to pay off a credit card with zero cash flow. The thing is, should you even pay your credit cards when unemployed? Yes. If you can afford to, yes. If you can afford the minimum payments, as well as food, shelter, and utilities, then you should absolutely, and I really want to insist on that, absolutely pay your credit cards during unemployment. And so now the thing is, you want to be careful about using your credit cards while unemployed. It's kind of tempting to take on credit card debts, expecting to pay it off later. Problem is, you don't know how long later it's going to take. Taking on new cards or not paying off your balance at the end of the month can be extremely costly if you don't get a new job quickly. So the best suggestions is actually stop using credit cards and avoid taking cash advances or signing up for financing plans until you find work. Also, avoid using your credit cards as cash machines, right? While you might find such options tempting, High interest credit card debt can actually create more problems than they solve. And you do not want to also think about withdrawing money from your 401k while you're unemployed. Because if you pull money out of tax deferred retirement plans like 401ks and traditional IRAs, you could face sizable tax penalties for early withdrawals. Worse still, you will be depleting accounts intended to fund your retirement, opening the door to future financial woes, right? You do not want to go that route. And you can also think about like other strategies in terms of like, do you have equity in your home? That this could be a possibility. Okay, a low interest home equity loan or line of credit may actually be the right solution for you, but be careful. The thing is, if you find yourself heading toward bankruptcy, your primary residence may be exempt, in which case you are putting your home at risk needlessly. It is kind of difficult to qualify for a home equity loan or line of credit, however, without reliable income, right? You also need a good credit score to qualify for the best interest rates. So it's one of those things you have to really navigate several scenarios to really see what really works for you, right? And it's one of those things where you have to also maybe think about debt settlements. You might want to consider debt settlements, and you want to do this only if you have enough money in the bank account to settle your debt, usually about 50% of the debt. And do not allocate money towards a debt settlement stockpile if you anticipate having problems paying for the basics. I'm talking about food, shelter, and utilities. And debt settlements might be a path for you after you found a new job and have the income to tackle your debt. Now, there are some consequences of missing credit card payments. Okay, it's one of those things where you got to ask yourself, do I want to go that route? When you're juggling multiple bills with no income, your credit card is not the highest priority when compared to those that keep a roof over your head, as well as court-ordered debts like child support, right? However, you should understand that something like stuff will happen, dangerous stuff will happen if you don't pay your credit card debt. I mean, stuff will happen to your FICO score. If you are delinquent on your credit card debt, you may be charged a late fee, your credit score may drop, and a penalty APR may be applied. Your credit card issuer may even sue you and attempt to get a court judgment to garnish your wages. So let's quickly go through the timing here. So after 1 day, you may be charged a late fee. Check your credit card agreements to find how much this fee will cost. You may also lose any promotional financing offers like reduced APRs. After 30 days, your credit score may drop. After 30 days, the credit card issuer can report your late payments to the credit bureaus, and the issuer can continue to report a late payment every billing cycle. After 1 day, after 60 days here. So after 60 days, your penalty APR can be applied. Penalty APRs are typically capped at 29.99%. Your penalty APR is outlined in your credit card agreement. And after 180 days, your account will close. However, you are still responsible for the debt, which may be collected by the credit card issuer or a third-party debt collection agency. So charge-offs stay on your credit reports for up to 7 years. 7 years, okay? So it's one of those things where you never want to go that route. So the bottom line here is that you got to really find a situation where you are budgeting for expenses on unemployment. You can try things like zero-based budgeting, spreadsheet budgeting, 50, 30, 20 budgeting. So it's all about you actually having a strategy whereby you are constantly sort of budgeting and constantly monitoring your expenses to make sure that you are in the right category. And you got to be in the right category anyway. Thank you so much for your attention. I really appreciate it. In today's conversation, let's do a quick recap here. I was explaining to you how to pay off a credit card with no cash flow. So I spoke to you about the steps. So contact your credit card company, enroll in creditor hardship programs, see if you qualify for government aid, consolidate or refinance your credit card debt, and also make a budget and prioritize expenses. Apply for unemployment benefits and other government programs. Also think about bad credit and unemployment. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.